Is it inflation, or are you just hallucinating? Are you seeing the economic data in your daily life, and is it all rosy? I would guess a resounding no. All the while, central banks around the world are reducing their dollar reserves and buying gold in record amounts not seen in history. Are central banks sensing weakness in the dollar and counterparty risk by holding it in reserve? If the smart money that usually run the printing presses are stocking up on gold, it makes sense that the ordinary investor prepare as well. If you think you may be falling behind in your financial goals, see the video description to access the free Inflation Retirement Calculator to make sure that you are on track. Also, please share your experience in the comments. To discuss the present economic environment and how investments in scarce and time-tested assets like gold and silver can help you secure your financial future, we will hear from author and researcher G. Edward Griffin, macroeconomist Luke Grommen, macro analyst and investor Lyn Alden, economist, White House advisor, and author Jim Rickards, economist and investor Keith Weiner.
So the dollar is, people call it a fiat currency, and fiat means force. It's certainly forced on us by a variety of government mechanisms. But economically, I think it's more important to talk about it as irredeemable. So it's a debt that can't be redeemed in money. And historically, if you went to the bank and deposited money, there's no question that money meant gold or silver. And there's no question that you were entitled to get your money back. You could, when you deposited, you would deposit roughly an ounce of gold and get a $20 bill. And then at the end, or whoever you paid with that $20 bill could come to the bank and push the $20 bill to the teller and get back the gold coin. And that was redemption. Today, there is no redeemability to it. You bring a $20 bill to the bank and say, give me my money. The teller is going to kind of squint at you and say, what?
Growth, default, and inflation are the three ways out of debt. Well, there's no reason to default. I mean, why would you? If you can print the money, why would you default? Just print the money. So we end up with inflation as the answer. Fine, I can't control the world, but I can control my own portfolio. And converting central bank money, which goes by the name of dollars or euros, into gold is a way, in my view, to preserve wealth. Now, as far as a gold standard is concerned, there's not a central bank in the world that wants a gold standard. You can be certain of that. My question is, are you at some point forced to go to a gold standard, not because you want to, but because you have to restore confidence in some kind of, collapse of confidence or systemic crisis, probably much worse than we saw in 2008? And the answer is you might have to do it just to put a lid on things if you don't reform the international monetary system sooner. So we're stuck in this weak growth cycle. We're seeing lost confidence in central bank money, and that's part of what's driving the price of gold higher.
The system has become so imbalanced that whenever we have a recession, if the dollar gets stronger, all of these dollar-denominated debts around the world harden. And what some of these countries do is they start selling some of the assets they've accumulated, and that can do things like freeze up our treasury market, break our treasury market, and cause all these issues. So basically, the hollowing out effect and the ability to kind of sustain that hollowing out for more decades than most other countries can make it so that whenever we do feel this, like whenever the world does change enough that the US dollar monetary premium goes away, maybe we enter a more multipolar world or something like that, we're kind of left holding a bag of having exported a large portion of our industrial base and then kind of getting hit with that sort of all at once. But I think going forward, we're entering a more multipolar world, either where you have separate currency blocks. So, for example, the yuan becomes the currency of choice in Asia, for example, while the dollar holds, much of the rest of the region, the world, basically split into 2 or 3 different major currency blocks. We're also seeing gold a little bit more emphasized in the core of the system. If you look at BRICS nations and BRICS and allies, they've been not really accumulating treasuries of the past decade, but they have been accumulating gold, and so that's been kind of a preference among a lot of them.
Just a quick interruption to say thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Also, a quick mention and shout out to one of our sponsors, Augusta Precious Metals. With over a decade in the industry, Augusta Precious Metals is one of the leading gold investing companies for trust, customer empowerment, and prices. The company provides 401k rollover services to tax-advantaged gold IRAs, as well as a unique gold investing educational webinar and resources for their customers, helping beginning and experienced investors protect their retirement wealth with confidence. Whether you are starting a brand new gold IRA or rolling over an existing account, the company will make this process seamless and stress-free. To find out more about Augusta Precious Metals, see the link in the video description to visit Augusta Precious Metals' official site to receive a free gold investing guide. Also, check out our video review of Augusta Precious Metals by clicking the link in the top right. Now, back to the episode.
It is sometimes amazing that we haven't experienced more inflation than we have. If they keep expanding the money supply so vastly, why aren't our prices growing faster than they really are? And the answer is that a good chunk of the money that the Fed created has been shipped overseas. I remember early in my research, I heard this expression that the Americans have exported their inflation. I thought, what is that? How can you export your inflation? Put it in a box and send it out? What do you do? Well, now I understand. You export your inflation by simply sending all these dollars that you created to these other countries, and then they send you their refrigerators and their cars and whatever, their TV sets. So you get hardware and they get little pieces of paper. It's a great deal for the American people for a while. Sooner or later, all of those pigeons come home to roost.
I think you can look back to the day before these sanctions were rolled out, and you can see Jamie Dimon on TV on Bloomberg saying, don't weaponize SWIFT, it's a threat to the dollar system. You can see Citigroup advising the White House, don't weaponize SWIFT or the dollar system, it's a threat to the dollar system. I think we are going to see the preeminence of not just gold, but of physical gold. I think you're going to see a market to gold is going to gain a significant amount of share in global reserves for exactly the reason you say, and not just physical gold, but it's no longer going to be, we trust to hold it in London, in the LBMA system. We want it, give it back. And yes, once again, you'll probably see people hold working capital levels of gold in the LBMA system, in Hong Kong, in Singapore, in these global financial centers, but the rest of it is going to start coming back to borders.
When the time comes, as it looks like it's now coming, when the rest of the world is saying, we don't want to play this game anymore, Uncle Sam's dollars are just becoming worthless, there are too many of them, we've got to find something else other than American dollars, then those dollars start to come back to America. People say, we don't want them anymore, what do we do with them? Once this revs up and we've got this little trickle of money coming back that we previously exported, once it becomes a flood and it starts to rush back, now we are getting our former exported inflation brought back to us, and then we'll see the quantity of money inside the United States grow much more rapidly even than the Federal Reserve can create it, because we're getting a previous money back. And that's when we will really see the tanking of the US dollar in terms of what it will buy.
The PhDs and the central bankers, they would like a fiat money standard because they control it. You can't control gold. I mean, you've got to go dig it up and mine it, and it's a costly process, and there's always enough gold. It's just a question of price. Even if central banks don't want a gold standard, you can go on a personal gold standard. You can personally protect your wealth by buying some gold, putting it in safe storage for yourself. You don't have to wait for a central bank gold standard. You can go on a personal gold standard.
Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business needs to ask themselves? Are we growing wealth or losing wealth? And how do we measure this? Gold is that tool. With a 5,000-year record that has withstood every economic business cycle, stock market booms and busts, global conflicts, and outlasting every faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.